On August 13th, Indian polymer producers will issue their revised ex-works prices. These figures set the procurement cost baseline for the coming weeks, forcing processors to decide whether to commit capital now or wait for better terms. This forecast from Polymer Bazaar provides a holistic assessment of the ruling price regulators leading into that revision. The headline prediction is a market-wide rollover. This indicates that official ex-works prices for polypropylene, polyethylene, and PVC are expected to remain unchanged. A flat price revision usually implies a period of market stability, allowing buyers to manage their inventory without the fear of immediate price spikes. However, beneath this surface stability, buying mood remains pessimistic. The unified headline is currently masking a series of fractured market conditions that require different responses. Processors and converters must now decide if they should commit their remaining capital to secure physical stock or hold cash while the market is weak. The August 13th date serves as a pivot point for margin optimization. The goal isn't just to find the lowest price, but to time the purchase against shifting availability. A miscalculation could mean missing out on unannounced producer discounts, or conversely, getting squeezed by the rising costs of imported material. Navigating this requires a little building within the bazaar. Polypropylene and polyethylene represent the first half of this divide, where market conditions currently lean in the buyer's favor. Producers are seeing a sharp decline in finished product sales, while ongoing geopolitical tensions continue to dampen the overall purchasing mood. These factors have created a lethargic bazaar environment, where processors are hesitant to commit to large raw material orders. To counter this stagnation and move inventory, Indian producers often introduce backdoor protections to incentivize buyers. This matrix shows how weak demand overrides official prices. With predicted rollovers, a lack of buying attention forces producers to implement discount schemes or price protection. Here, leverage remains with the processor, using low market momentum to negotiate favorable terms. For PP and PE, the official rollover is essentially a starting point for negotiation rather than a fixed cost. Choosing to wait for these potential discounts does carry an operational trade-off. Staying liquid is a clear benefit when finished product sales are slow, as it prevents capital from being locked in a depreciating asset. However, buyers must account for the fact that certain material grades are currently in short supply. Specifically, stocks of RCP grades and LD lamination grades are becoming harder to find in the retail bazaar. This means the wait-and-see strategy works for bulk commodities, but requires immediate, targeted procurement for specialized grades to avoid production halts. The PVC market is operating on a completely different set of incentives compared to PP and PE. Instead of lethargy, PVC converters are seeing higher offers for imported material. This has led to a slight uptick in buying as processors attempt to secure domestic material before prices are adjusted upward to match imports. This behavior is being driven by the continued weakness of the Indian rupee. This chart tracks currency versus material costs. As the INR trends downward, import costs rise, pushing domestic PVC prices upward. Purchasing PVC now hedges against currency hikes, though it locks up cash needed if downstream demand struggles. For PVC, the August 13th rollover represents a temporary window to buy before macroeconomic factors push prices higher. This decision tree flowchart provides a framework for turning current conditions into specific procurement actions. The first step depends on the specific material you need to source. If you are sourcing PP or PE, the next step is to check your current stock levels for specific specialized grades. If you are low on RCP or LD lamination, procure only what is necessary to cover your immediate production needs. If your inventory of those grades is stable, the recommendation is to hold bulk orders and wait for producers to introduce discount schemes. The PVC branch leads to a more direct conclusion due to the pressure from import offers. To protect against the weakening INR, the strategy here is to procure bulk stock immediately before domestic prices move. Success depends on looking past the general market trend to align your timing with each material's specific vulnerabilities. The August 13th forecast suggests a rollover, but the data shows two very different markets. Macroeconomic factors like currency valuation and geopolitical shifts remain volatile and can alter these baseline predictions with very little notice. We recommend monitoring real-time data feeds or using AI-driven updates to stay ahead of these fluctuations. Blindly following a headline rollover can lead to missed opportunities. A targeted, material-specific approach is the most reliable way to maintain profitability in this environment.